Hey traders, Jason here from Levitt Brothers. So in this video, I'm going to walk through a few trades with some technical indicators, just keeping things simple. Some daily charts, some hourly charts, 2-hour charts, some shorter term time frames. My purpose is just to give you some ideas, okay? Because in trading, you only need to find a single trade that works for you, get really good at that, and you can just execute that one trade over and over. And you don't have to know anything else. You don't have to be good at anything else. You don't have to care about anything else. All you need to do is find one simple trade that works for you, and you could carve out your little niche and make a decent living with nobody even knowing that you're out there. Okay, so my mantra when it comes to trading is the following. Okay, you need to find something that is simple. Okay, overly complex typically doesn't work. Just some simple system that fits your personality. Okay, there's some people out there that will say like, oh, you gotta empower yourself to step outside your comfort zone. No, that's garbage. Okay, find something that fits your personality. Find something that's like within your comfort zone. Something simple, something that's within your comfort zone, something that you could execute. Something that's repeatable. Okay, it doesn't do you any good to buy some penny stock, have it go up, great, you made some money, you get to keep it, you don't have to give it back, but that's not repeatable. You can't do that over and over. So something simple, something that fits you, something that is repeatable, you know, a stock that's at a decent price and has volume and that, you know, patterns repeat. And then finally, something that is scalable. Okay, it doesn't do you any good to find something that works once and you could do it with 100 shares, but you can't scale it up, because ideally, you want to find something that works, and you want to, you know, buy a stock at 30 and sell it at 33. And when you're starting out, you're doing 100 shares, then 200, then 500, 1,000, and a couple years later, you're doing like 10,000 shares. So instead of making 300 on a trade, you're making 30,000. Same setup, same trade, same indicators, same everything, but you can scale it up. Okay, that is kind of your goal here. Something simple, something that fits you, something that you could repeat, something that's scalable. Okay, and then while you're doing this, you're keeping in mind that trading is a seasonal activity. Okay, it's like watering the flowers in the spring. It's like, you know, raking the leaves in the fall. It's not something you do all the time. It's something that you pick your spots. Because sometimes your style will be in sync with the market and sometimes it will be out of sync with the market. And you have to recognize this. A lot of people will find something that works and they put their head down and they just execute trade after trade after trade, and they don't realize that, you know, sometimes sometimes you're in sync and you got to trade, and sometimes you're out of sync and you should lay low, and which is my last point here, which means sometimes you'll be active and aggressive and sometimes you won't trade at all. And you got to understand this, because a lot of times people will trade, they'll make money, and they keep trading and they give it all back, and they don't realize there's nothing wrong with them. There's nothing wrong with their system. It's just that the market changed and their style is no longer in sync with the market, and they have to learn to step aside, let other people with a different system trade, and then, you know, a few months later, their style will come back. All right, so let me go through a few trade examples here. This is how I operate. Maybe you can grab something from here, a little nugget or two. Maybe you want to copy off me. All I'm trying to do is give you some ideas here, okay? I talk about these things in detail in my masterclass. All the indicators I talk about here, RSI, MACD, stochastic, I do a separate chapter on each one, and then I put them all together and I show you exactly how I operate, along with a host of other things, okay? My purpose here is just to give you some ideas, okay? Maybe you copy off me exactly. Maybe you just grab a nugget or two, just trying to find something that you can grab and incorporate into your system, or to create a system that's simple, repeatable, scalable, what I've already talked about. All right, let's get into this. All right, so here is BITX. This is the Bitcoin ETF. So this is where, you know, this is just how I operate. I have RSI, MACD, stochastics. So what I see here is Bitcoin dropped over here, okay? And I draw trend lines on my RSI. I find them to be very powerful. So we have RSI trends up, it breaks a support line, MACD breaks down, and the stochastic was trending down. So we get a lot of like sell signals here. You don't have to sell. This is a 1-hour chart. You don't have to sell right here, because if you're a swing trader playing a bigger picture, there's going to be counter moves within a bigger trend. But notice that when the stock goes back up and we make a higher high here, notice that the RSI does not go back up into overbought territory. You want overbought, because overbought can stay overbought for a long time. You want it to go back into overbought territory to tell you that it's strong, but it fails to do that. So you have a negative divergence forms, and notice the MACD failed to cross back up. Okay, so we have BITX's higher high here. This does not get into overbought territory. This does not cross back up. Stochastic cycles up and then crosses down. So now we hit, first sell signals were over here on the left. Now we got another round of sell signals through here when the RSI broke down from its flag. MACD kissed its signal line and then expanded off it. And then stochastic cycled up and cycled down. So at that point, when we were up here, I knew that Bitcoin was not going to just be a runaway and go up to whatever it was going to go up to. I mean, it was up in the 70,000s. I knew it wasn't going to just run away. I knew we were getting a second set of sell signals, and it was going to fall. And sure enough, it has fallen. And this stock has fallen from like the high 50s down to the low 40s. That's a really good swing trade that only lasted a week or so. All right, that was the hourly chart. Same signals flashed on the 2-hour chart. Okay, we have higher high here, but RSI broke down, MACD crossed down, stochastic crossed down. Then we had, okay, that all happened on the first move down. Then we have a move to a higher high here. RSI flags, can't match its previous high. MACD kisses, stochastic crosses down, and then we, from the higher high, I knew that this was not going to be a runaway market, and sure enough, it turned around and fell. All right, let's go look at Bitcoin itself, and I'm going to go through this one a little bit quicker because it matches what I just showed you. This is the 1-hour chart. Bitcoin higher high. You can see the bubble here marking the new high. RSI had crossed down, and then on the following bounce, it simply flagged. Instead of moving into higher high territory, instead of matching the previous high or getting into overbought territory, which is what you want to see when this thing makes a new high over here, it instead just flagged. MACD, which crossed here, it kissed here, it couldn't cross back up, and then the stochastic, which is a timing indicator, came up and then cycled down. So we have a combination of this crossing down, this kissing here and then expanding off, and then the RSI flagging and then breaking down there told me this Bitcoin was not going to run away. You can see here it's like 73,865 was a high there. I knew it wasn't going to run away, and sure enough, it has fallen down into the low 60,000s. All right, let's look at the next example. Here's a shorter term chart. This is a 2-hour chart with CleanSpark, which is a Bitcoin mining stock. Let's look at a trade in the middle of this trend here. All right, so CleanSpark it looked like it was just trading in a sideways range, which is fine. Again, maybe your trade is finding a bounce within a range, okay? So what we have here is you have lower low here, we have higher high with the MACD histogram, and then a cross, okay? So like that push down had less energy, less momentum than the previous push down, so the downside momentum was starting to wane, so the odds favored a reversal coming. So we have positive divergence, then a cross up. Over here with RSI, we got a little base here, and then it broke out of the base, then it flagged over here, and then broke out right there. And then meanwhile, the stochastic moved up and then stayed higher. Okay, so while this is so during this sequence, you can get off a trade over here from like 17 to 20. Doesn't sound like much, but when you have 17 to 20 is a great move. It's a simple setup, so it's repeatable. Lots of volume, so it's scalable. Nobody even knows you exist when you take this type of a trade within a range, and that's the best place to be. Okay, I'm assuming you're not trading 100 million, 200 million bucks. You're just trading a relatively small. We're all trading small accounts compared to the total amount of money that's out there. If you can carve out a niche and just a simple trade like this from 17 to 20 with a high volume stock, that's all you need in order to carve out a living doing this. Next example, Palantir. So this is a stock I've been in and out of numerous times the last year. Stock traded up, trading in an ascending triangle here, same highs, finding support down near the 21, which is the orange line, breaks out to a new high. But during that, when it was pushing to a new high, notice over here, the RSI could not get into overbought territory and it could not match the previous high. Okay, instead it simply flags sideways. The MACD, which had crossed down over here, tried to cross back up, but it failed. And then stochastic negative divergence couldn't get above 80, and then it too crossed back down. So Palantir goes up to new high, looks like it's going to break out, make a run into the high 20s, and the indicators said, no, this can't move up, this couldn't cross back up, this moved up, but as a timing, and then immediately moved down. So all this told me that this Palantir breakout was not going to last, it was going to fade back. Okay, so I sold my Palantir shares last week. And as of now, I just don't have any. I was content to stand aside and let the stock pull back, and I'll see what happens. So I don't just use my system. I don't just use it as an entry technique. I use it as a management technique that when I get like a negative signal like this, it helps me time my exits. Another one, SOUN, Soundhound. So stock had done well. You can see on the left side of the chart. Then it came down here. So I love drawing trend lines on RSI. Okay, you can see the RSI basis here breaks out. Little bit of a positive divergence here with the MACD as it goes like this, and then it crosses up, and then the stochastic, which cycled down and then came back up. Then instead of normally, if this stock was weak, what would happen is these indicators would move up and then move down. But what happened instead is they flagged and started acting well. So we got the RSI, and again, if this stock was weak, RSI would have moved up and then come back down. But instead, it just flagged. If the stock was weak, the MACD would have crossed back up and then crossed back down. But instead, it crossed up and it remained trending up, and then the stochastic moved up. So we got confirmation in here that the stock was strong and wasn't going to go back down. It was just going to consolidate and move back up, and that's exactly what happened. Okay, last example. So here's Zim, and I'm going to sound like a broken record here, but that's good because I have a system. I follow it. It's the same thing over and over. I said at the top, you want something that's repeatable. Repeatable means it's the same thing over and over. You're not constantly changing it. So let's go through this. Zim did really well. Broke out over here at $8, ran up. Other than this one day here, we have consolidation pattern and breaks out again. Then it gets a little bit loose over here. So I want to talk through this. So as it's forming up here, you have RSI breaks down here. Okay, trends up, then it breaks down. You have a negative divergence here with the MACD histogram, and then that crosses down, and the stochastic crosses down. So you get a lot of things that tell you in here, in this area, we're told that there's probably going to be a pullback. Okay, it's riding its 8 EMA up. Okay, we're getting some sell signals, so it's probably going to drop to its 21. Then what happens is after it pulls back and pushes up to a higher high. But during that higher high, the RSI fails to move up into overbought territory. It fails to match its previous high, so we don't get a sign that strength is continuing. The MACD over here doesn't cross back up, and then the stochastic simply moves up and crosses back down. So the combination of RSI flagging and breaking down, MACD kissing and then expanding to the downside, and the stochastic crossing back down tells us that this new high over here is not going to last. Okay, so if you played the breakout, that's great. That's a viable strategy, but the indicators told us it's not going to last, and you can see what happened. It dropped from like the mid-teens down to under $10. Okay. Hope you got something out of this. Just trying to give you a few nuggets. Again, in my masterclass, I talk about a lot of different indicators, a lot of different strategies, All you need is a simple strategy that works, that fits you, that's repeatable, that's scalable, and then you practice it, get good at it, and you could carve out a nice little niche without anyone even knowing you exist. All right, check out my masterclass, and I'll see you next time.